But gold is the antithesis of all of that. The anti-dollar, the anti-fiat trade is the purchase of gold. The anti-debt is the purchase of gold. They go hand to hand, as I said, the Siamese twins of fiat and debt. Gold is that trade that is the big winner. And as it stands and moves, so its sisters and siblings will move like silver and platinum amongst them. And that's where we are, and it is a debt-based collapse. So don't get sucked into one of the narratives that say, well, trying to trade a blow-off in stocks. In gold ounces, both the NASDAQ and the S&P and the Dow Jones are down despite making nominal new highs since the trade tariff collapse. And in fact, the final high, and it might be worth the chart share just to put a proper nail in this vampire's heart and put an end to...
This urgent warning comes from market expert Francis Hunt, well known as the market sniper. He is calling for a radical reform of the banking system and predicting another recession. The shockwaves will eventually spread throughout Europe, the United Kingdom, and the entire world. Hunt warns, even though the United States, which is weighed down by record debt, will be affected the most. According to Hunt, silver is poised for a historic breakout, with long-term price forecasts of up to $330. Silver's volatility and dual function as a monetary and industrial metal might yield much larger returns, even though gold is still the foundation of stability. In actuality, Hunt contends that the current stock market surge is a myth. Don't forget to like, subscribe, and ring the bell for the latest analysis on gold and silver markets. We'd love to hear your predictions. Drop a comment below.
The main trade is the financial system is based on a debt fiat. It's the foundation system, and it's in collapse. And it's not just in collapse in America, as you pointed out, but it is, unfortunately for Americans, the privilege of the hegemon also means you fall from a higher step ladder when it comes to that. So everybody will be hurt, and America will be hurt badly, probably the worst, but Europe is not going to be far behind, neither the UK. It's particularly the Western world. And then even the rest of the world that isn't in the Western world will be affected by major buyers disappearing, and so we're talking global probable depression, and you have to survive that. You have to survive that when that happens. And yeah, it's a heck of a thing. But gold is the antithesis of all of that. The anti-dollar, the anti-fiat trade is the purchase of gold. The anti-debt is the purchase of gold. They go hand to hand, as I said, the Siamese twins of fiat and debt. Gold is that trade that is the big winner. And as it stands and moves, so its sisters and siblings will move like silver and platinum amongst them. And that's where we are, and it is a debt-based collapse. So don't get sucked into one of the narratives that say, well, trying to trade a blow-off in stocks. In gold ounces, both the NASDAQ and the S&P and the Dow Jones are down despite making nominal new highs since the trade tariff collapse. And in fact, the final high, and it might be worth the chart share just to put a proper nail in this vampire's heart and put an end to, that story, properly put Dracula to death on that one, is if we take and do the very charts for you. Let's take the Dow Jones Industrial, for example. It's a popular one. Everyone will say, yeah, but all-time highs, all this narrative. Everything should be measured in gold ounces in a fiat repressional collapse period. There is no sound money when they're all in the fiat system. And that's what you have. The high for the equity market culture is here. That was peak equity. 1999 was peak equity. We're talking a localized high previous to the current stock market's highs that you're making now. That was gold at 256 ounces and the NASDAQ.com boom. You corrected substantially there, and we started to have gold at 1,000. Then gold slowed down a little bit, it went right up to 1927 at this point. Then it came back down a little bit, and they reflated a bit of a NASDAQ bubble. As you can see, I have an inverted setup structure for downside here, which is saying in gold ounces, the Dow Jones is heading down. And it's the same for the S&P and the NASDAQ, despite NVIDIA, despite all the things you say. So stay with the core winner, because everything is a monkey on a grease pole sliding down. And it might go up, but in real terms, it's monkey go down. because I'm kind of the charts guy. It's what everybody who comes to expect. We trackers, and we read the footprints in the sand, basically. That's our primary goal. So we just had an amazing run. Our community and I were aggressively leverage long here. So we are investors, but we also try add a bit of extra spice on that by getting leverage long. And we got leverage long in and around the 3,340s, 3,350s, 3,360s with multiple entries. And you have just made a key technical target for us at the 3,769. This is our bespoke favorite setup. It's called the HVF setup. It's a squeeze in volatility. It's the Hunt volatility funnel method. And this is what we love to trade. And in bull markets, you consistently get them. So it's a very useful way to turbocharge your stacking, providing you can implement safely with real stop losses and the the asymmetric gains. You accelerate your ability to stack. And this has got a lot of our community members who are banking over 6 digits, 1 or 2 more. Others at lower levels are making just good profits for the first time in trading. I'll just highlight. So here was the run. You made our interim target there. That's your point of rest. You got a red candle there and a pullback. Then you went into this broadening structure. Many people see that as weakness. And in actual fact, when you are inside an HVF play zone, which is that after this triggering point on the green line and waiting for target, it's actually bullish. You popped out the top, and now you've done that. And these 2 candles, a little bit of a wick sell here, you can see back down, and we've got a red candle also with an upper wick sell. So a little bit more sideways and possibly down now for a spell before opportunity. So if you were just about to put $1 million into miners, you might get them priced a tad cheaper if you're patient. But don't stop getting those miners. Don't stop getting that gold, silver, and platinum. But from a timing perspective now, we've just done. We expect progress decay. That's what a target's meant to be, a localized high where you get a rest and a little bit of pullback. And you often create new structure. So an example of what could happen, it's just one of many. It's not a prediction, by the way. You could come down a bit, you could swing about a bit, you could come down a bit, you could calm down, and then some data comes out, and then you go again. So for those that are stackers with physical, there's no action to take. For people that are more trading with CFDs and things like that, you might want to bear a bit of awareness to that. Also, everybody's become super bearish the dollar, and we were too, and we were right to be. But there's sign that the dollar against the other fiats, and even here on gold, will have a little bit of pushback. I'll just highlight the monthly. You can see how the dollar has underperformed relative to the euro, another failed fiat, of course. Let me just remove that. Sorry, that box. We don't need that. It's jumped on. You can see how you've had over the last few months. I mean, literally, this is January, February, March, April, May, June, July, August. I think I started, that should be January, so forgive me, I started one after. And that's a little bit like a shooting star, and most of these were big, stretchy, upside candles with deval of the dollar, up valuation of the euro, which has all of the same problems in many senses. A lot of people are more familiar with the Dixie, which is actually the same thing, but upside down a little bit. It has a bit of Japanese yen, Swiss franc, and Swedish krona in it to small degrees, but it's 52% still the euro. And you've had a little bit of a reversal after making a marginally lower low and coming back up.
According to Francis Hunt, the forces that control the world financial system will never permit gold to be used as actual currency again. Every new money, whether it be fiat, Bitcoin, or digital currencies issued by central banks, serves as a stand-in for trust instead. However, Hunt cautions that confidence in these systems is already declining, demonstrating how precarious the financial system has grown. With near-term goals of $330 and a closer milestone of $100, he sees a huge opportunity in silver. Hunt points out that silver is poised for one of the biggest breakouts in decades, even though gold may lead the overall pace. Silver offers greater potential returns than gold, but it has been more volatile over the last 5 years. Show some love by hitting the like button, subscribing to the channel, and turning on notifications. Your support means a lot.
The people that are orchestrating this system behind it, the dark forces, names you don't even probably know or that you might only suspect, are never going to give you your own money. and gold is a keep you honest system. They don't want that. They entrench their power by virtue of controlling money supply, and it's not one they intend to give up. So the typical game is they install. I was listening to somebody, and he was making the case for Bitcoin and why my criticism of his Japanese imaginary friend superhero that came to save him with the Bitcoin creation is a false construct. He said, well, it's the first time and this is happening for the first time. And I go, no, the Chinese invented the printing press. We had gold, and then we got printed fiat, and that was new technology back then. It was paper printed with a very unique stamp, and you said, this is in lieu of that. And then they tried to bypass the value of base money, gold, onto the fiat. And that was new technology, and it was crazy and it was amazing. It was basically blacksmith's IOU notes, the big guys that shoed the horses, who were holding more gold than anybody ever asked for at one time and could dish out more IOUs than there were gold. And that is always, a fractional reserve system is always the intention to maintain. And Bitcoin and CBDCs are going to become the new, but but it's technological, it's more convenient, all of this. That's the new derivative proxy that gets inserted in between the real money, which is the base physical metal. So you're going to be always sold an incredible technology and incredible this and incredible that. It's different this time. It's so different. It's always so different, to get you to put faith into a proxy that is based off of a base money that they later sever the tie for, and everything becomes entirely faith, which is fiat. Hence, fiat comes from a faith-based system. We say that note is worth a certain amount of hamburgers or meals or potatoes because of everyone accepting the price for that good, and that note being passed around will secure you it. The problem is the faith has been undermined. The debt is collapsing, too much fiat, and we're at the end of such a cycle. And part of their job to rinse, repeat their continual scam is to get participants to develop faith in some new derivative proxy rather than the original money. And that's where CBDCs come in, and I think they will be doing it now. We're saying bankers with this, and we can do that, and you can do that. All these features and all of this. It's going to be a technological whiz-bang, and it's no more than the printing press that the Chinese printed and a piece of paper having printed on it. It was new technology once back then too. People didn't have prints, the ability to do printing and clean white paper as easily available. And fiat note was a wonderment. It's beautiful, and an IOU, and it's backed by your government and backed by this. Don't put your faith in the same criminals, because they will sell you the same scam, just with a different flavor, a different tune. We highlighted this is a quarterly chart, again, reminder. We highlighted when you first tripped the wire on the main pattern, but actually we were already in long leveraged, and you'll stop there. And the gain is up to $330. That's a huge, huge move. This is, as I say, a very big time frame view. It's a massive risk reward, 23.91, my apologies, 23.91. But if you had actually got in here, it's actually even better too. So we were saying, look, this is the point for longs. This is some time ago. We were on your show talking about this. And we've done this divided by the CPI AU CSL as well, which is the alleged inflation rates. Let's just get that risk reward. So this is an amazing chart. That's where you can see 1st of Jan 2025 was the first time you broke the green line, the triggering event for us. And since then you're up, and you're up at 44.15. I point out that there's a kind of 47, 69, 48 blue line here, which runs through those highs, but it shouldn't be. If it has a pause, it shouldn't be excessive, and it's not guaranteed that it will. It's run our first interim target. The next target is up at $90. People will be looking very forward to that, because they'll be on the doorstep of 3 digits. And then we're going a whole next level of up.
Hunt also emphasizes how a historic opportunity in silver has been generated by this breakdown of confidence. His study indicates that one of the biggest breakouts in decades is about to occur in silver. He pinpoints two important price benchmarks, a more distant level at $50 and a larger objective at $330. Although gold is still the king and sets the pace for the most part, silver's volatility enables it to rise more quickly when market momentum increases. According to Hunt's technical analysis, silver is already gaining ground on gold, and this breakout phase may pick up speed quickly, pushing the price above $60 or $70 before hitting the longer-term target. Hunt's larger argument is that this is a structurally supported move rather than a speculative frenzy. Early positioning can result in significant rewards for investors, even on lesser leverage bets as the market develops. Although gold influences the movements of silver, the metals are exhibiting a historic synchronization between technical signals and fundamentals. Hunt comes to the conclusion that as this is a macro-level, long-term setup, these movements should be observed with patience and perspective. Even while daily swings may seem little, the improvements will appear substantial and consistent when seen over months or years. Hunt essentially cautions that the financial system is set up to keep you reliant on proxies rather than actual currency, but he also points out that silver is a unique chance to profit from the structural unfairness. This is an opportunity for viewers to learn about the dangers of contemporary finance as well as the possibility of significant profits in precious metals if they invest sensibly. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and turn on notifications so you're always up to date. Thanks for watching.